Hello and welcome to another update video about gold. Yeah, something interesting happened. We've reached today my overall higher level price target of 1720. Yeah, we came down here to 1721, but to be fair, I would consider that as target reached. That target was formulated when we were up here at around I think just below $2,000. When I said that we were going to turn around, we had another small spike. Lasted only I think 1 or 2 days in March, and then we really started that expected sell-off, and the target range for this wave 4 based on the Elliott wave count is located between $1,600 roughly and 1720. To be fair, it shows even 1722 here, so from that point of view, target definitely reached, and we already saw a bit of a reaction to it, nothing strong. Therefore, expectation would be to go even deeper into this target area that is located between the 38.2 and the 50% Fibonacci retracement level here on the gold chart. Overall, higher level point of view. We obviously started here in a wave 1, yeah, since 2015, that swing low, which was a wave 4. We're now in this wave 5 in blue. And within this wave 5, we have a wave 1 to the upside, finished in 2016 in July. Came down in a wave 2 here in December 2016, moved up in a very long wave 3. We're now coming down in a 4, which will probably last a few more weeks or months even, after which we will reverse back to the upside to a wave 5. So from that point of view, it's currently a bullish wave count embedded in the overall uptrend. However, there's a short-term downtrend going on, and that correction based on the Elliott wave count, it has been lasting now since August 2020 when we started this wave A, which is part of a corrective wave. The wave B, also part of this corrective wave 4, and now we're in the wave C, and this ABC pattern is forming the wave 4. Now, could this be something different? Yes, indeed it could, and I did explain that in the last videos. That would be the assumption that indeed we have already seen here a 3, a 4, and a 5, and that this is a larger sell-off after a completed Elliott wave cycle. Now that could take us down into a 3-digit gold price range. Do I think it's likely? No, but this will become very, very likely should we break substantially below the 50% Fibonacci retracement level below $1,600. And I'm not talking about an intraday low. No, I'm talking about something more substantial. What means substantial? Well, in my opinion, it is always, first of all, that we come below it, yeah, and that we retest it here from below successfully, and that means that will push us further down. That would be a substantial breakout. We can't get back into this range within the same week, maybe, okay? So let's take a look at the lower level wave count. So from that point of view, I still expect lower levels, ideally not below $1,600, because we want to get back into an uptrend. But then at the latest, after this wave 5, there would be a more substantial sell-off. So we are either way here at the end of a cycle or towards the end of a cycle. But if we have this wave 5 play out, I mean, this could take years, okay, to play out. Well, where are we on the lower level wave count now? So we're obviously in the middle of a sell-off. Last video or videos, I told you that I think we were going to see a wave 4 to the upside here, a wave 4 retracement into the region here, and the target, well, that was based on the Fibonacci retracement levels. Obviously hasn't happened, or hasn't happened yet at least. Yeah, so at that time I assumed the wave 3 low was reached here, and we could move up in a wave 4 into the region between 1761 and 1781, maybe even all the way up to 1796, but not higher. That would be between the 23.6% Fib level and the 50% Fib level. Now, the wave 3, this all what is happening here could still be part of the wave 3. Yeah, so all of this at the moment, I give it the benefit of the doubt and say this could all be still part of the wave 3. Here you can see we touched the target area, which is awesome, and we can currently still assume, and this is still possible, to see a wave 4 retracement to the upside. Now that would now need to move a little bit to the downside, because the wave 3 might not, you know, it could be the wave 4, the wave 3 wasn't finished yet. Now this is not entirely clear. Two possibilities here. Wave 3, first possibility, wave 3 was finished here. We've seen a wave 4, not exactly how it should be. Yeah, it only came didn't even touch the 23.6% fib level, what I would normally call the minimum for a wave 4. But in a very bearish environment, maybe we made a very, occasionally you see a wave 4 that is shorter than expected. Occasionally it happens. So this is the possibility. This was the wave 4 and we've slightly missed the target, and then we are now moving down in a wave 5. That's one possibility. Other possibility, all of this is still part of the wave 3. We are still going to see this wave 4 play out, and the wave 5 then is still coming. So both scenarios, it doesn't change really a lot in the overall scenario. I personally wouldn't trade this wave 4 anyway, because it is against the trend, and the wave 4 is normally very short anyway. So it can be long time-wise, but it normally doesn't retrace a lot. So from that point of view, I will keep an eye on this in the next few days, see how this is evolving until we see a little bit more clarity in the chart structure. For me, yeah, we can use some more clues to identify when wave 3 is finished. We do this by using the Fibonacci extensions from the high here to the low of the wave 1, again to the high of the wave 2. And here, yeah, we've got here an ideal level for the wave 3. That is also why I thought it would be finished here, is the 1.618 fib extension. The 1.786 is another target, and the 200% at 1710. So as long as we stay above 1710, I would say this could still be the wave 3. If we drop below it, I would then give confirmation wave 3 was already finished. Yeah, but overall, again, it doesn't change anything in the higher level scenario. The direction here is clearly still to the downside, and I wouldn't call this a bullish reaction to a support level anyway. So from my point of view, there is further downside. Either we see this move up before we come down, or we go down straight away. The way this currently looks to me personally, I would rather say we actually go down straight away, because it is very weak. Yeah, it's like we're rolling over already. Let's see how the next few days are going to play out. I'll definitely keep you updated about gold. So hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe, and maybe even check out my main channel, More Crypto Online. Thanks a lot for watching. Bye-bye.